Hello, former professors of investment vehicles and coverage. My name is Brandon Ivan Gaytan Gonzalez, and today I'm going to walk you through our investment strategy proposal for Socio Formador. So let's begin. First of all, we selected silver. But why? Well, it's because it combines two key roles. On one side, it's a precious metal that acts as a safe haven asset during times of inflation or global uncertainty. And on the other hand, it has a strong industrial demand especially in electronics, medicine, and renewable energy. This dual nature of silver makes it more volatile than gold, but also more attractive for building strategies with derivatives. Also, silver futures on CME COMEX are highly liquid and transparent, ensuring efficient trading for institutional investors such as Socio Formador. But well, what would be the best strategy for them? We analyzed four strategies: a long futures, long call, bull call spread, and a long futures with collar. The one that best fits Socio Formador's conservative profile is the long futures with collar. But how does it work? Well, we take a long position in silver futures to gain exposure. We buy a protected put option to limit losses if silver falls sharply, and we sell a call option to finance the put, reducing the costs. This will create defined outcomes. In our worst case, the maximum loss will be around 1.85 million pesos, which is just 3.7% of the allocated capital. In a favorable scenario, the maximum gain can reach around 9.3 million pesos, or 18.6% of the total capital. Because of the cost of the put is offset by selling the call, the structure is very cost efficient. This makes it the best option. Why? Because it gives exposure to silver, protects the downsides, and aligns perfectly with the conservative nature of the client. But also, we cannot forget about our operation costs. Futures, as we know, require a margin deposit. In our case, it would be a 260,000 Mexican pesos per contract. We are managing 12 contracts for this strategy and mark-to-market daily adjustments are done. The collar option results in near zero net premium, making the strategy cost efficient. Transaction costs are limited to broker commissions and exchange fees, both standard in CME and COMEX. As we know, silver prices are highly volatile and are driven by several key factors, some risk factors. The strength of the US dollar and interest rates, inflation and safe haven demand, industrial demand, and supply disruptions. Based on these factors, we set clear trigger points for an exit strategy. If silver falls close to the protected put strike, we can reinforce protection by buying more puts or closing futures positions. If silver rises and approaches the short call strike, we can roll the call to a higher level to extend upside potential. And if market conditions change drastically, the positions can be closed early. Of course, regular reviews will ensure the strategy is adapted as conditions evolve. For instance, the long futures with collar is the most suitable strategy for socio formador because it protects capital, captures attractive returns, and provides the transparency and security they are looking for. It is a strategy that balances growth with responsibility, ensuring the savings of members are managed wisely. Thank you.